This is the MTPredictor weekly market update for January 11th. So we talked last week about getting selling early this new year. If we look at the S&P here, now this was the initial sell-off back in the middle of December. At this point we're anticipating we get a rally into the holidays. Right? In fact, we can go back. Let's just put our next resistance level on here. We're taking a decision point. This tells us this is an area the market will need to make a decision if it gets up into this level. It's either going to hold as resistance, or if the market makes a decision to go through that level, it's what we call trend continuation. But our first thoughts are, is this going to be holding as resistance as the S&P came up? And then right here, this was December 29th. We had a decision point sell signal. Again, we had the resistance area on the chart ahead of time, but the software gave the signal because we had divergence. So a higher high in price here between those two swings, but a lower high in the oscillator here. So the software sees that divergence in conjunction with the resistance area. December 30th, we had the red sellers candle confirming now that sellers were overcoming buyers in that resistance level. And so we put the analysis on here. Now, it's not what we call a standard trade setup because our trend filter here is up, saying the larger degree trend is still up. In bigger picture, the larger degree trend certainly is still up, but we were anticipating a correction. So you can see when these decision points have come up here, even though we have an uptrend here, we get corrections. And that's what these decision point, they look for market tops and market bottoms, or turning points in the market. So we pay attention. Anyway, that began the sell-off in January here. We put a bottom, at least a temporary bottom in, began to rally here. This unfolded, I think, on 60-minute charts as a 5-wave sequence down. And here we are. I'm just going to remove this analysis here. We can use the tools in the software and say, okay, where's the wave 2 or B if this is an initial move? Wave 1 here. Okay, so we came into that wave 2 or B resistance level here. This is a cluster of fib levels here. We had sellers overcoming buyers in the resistance area there on Friday. So if this low gets taken out, we may just continue lower from here. We could see what we'd like to see if we're going to get a big move down is first we get this initial leg, a rally here, maybe an A, a B, and a C back in this wave 2 or B level. If we can get an A, B, C correction in this wave 2 or B level, then we might anticipate a big move in wave 3 down. Now if they just take this area out to the upside, well, let's take our next resistance area. That will say that they're going to go through this level, and here's our next resistance level, ES around 2100. Nice round number again there. Again, bigger picture, even though you can see also on the weekly, remember we talked last week, if they took out the low of the this candle here, that would trigger the weekly short as well. But we can see, obviously, bigger picture, this is still quite a strong uptrend here. So again, just looking, you see these DPs, look for corrections, turning points. We'll see how much movement that we get from here. The same picture here in the Dow. The NQ is a little different because the NQ failed to make a new high where the other markets made a new high here. It failed to make a new high, so this could be your potential one here. A, B. If we get a C, here's your minimum wave C target if the NQ comes up into this level, and then we might project the larger wave 3 down at that point. If it takes these levels out, NQ makes a new high, then that trend, which is up, bigger picture, continues. As we get into middle, especially around that January 25th, remember the Greek. Over there in Greece, they're going to have those elections, and there's a very liberal party that is polling very well, and they have said if they get in, that they will look to renegotiate Greece's debt, and if they can't, they will look to drop out of the euro. Um, and so this could be depending on what happens there, could certainly be a market, or make the market a little more volatile. As we've seen, volatility has kind of picked up, but that may also make the markets a little nervous. So something to be aware of around the 25th of January, I believe, is that event. And if Greece does something there, how is that going to affect, Spain and, these other countries that were not in much better shape. So certainly something to keep an eye on there. All right, let's look at, we've been keeping our eye on the dollar because it's been such a driver of things, and we can see on the monthly chart, remember we had our major support here, our initial correction, our initial rally here, our ABC correction, that's our holy grail trade, so we look at this as a potential wave 1, the ABC in wave 2, we projected wave 3 up, and you can see we did hit the wave 3 target last week, and trading closed at 92.15 there, and do have strength on the STF on the monthly chart, so the upside may not be done, but we're starting to see, you can see this candle is turning red, indicating sellers at this moment are overcoming buyers. If we look at the weekly chart, closed the week with a little pullback, and red sellers candle there. Again, strength on the STF as the oscillator is through the gray band at the top here. Again, that was indicating that it was more upside. We'll see if they continue to get some selling. Again, Friday, sellers overcoming buyers. Still strength on the daily chart as well. So certainly the dollar is extended, and certainly in a position where we would anticipate maybe getting some more selling coming in, maybe just back to 91 level, something like that. Nothing major, but keep an eye on that. And then also we were looking at gold, because gold had put in at least a temporary bottom here. You can see on the daily chart the 5-wave pattern in the weekly support, an area where we anticipate we should get a correction. Usually it's going to be back to this level, the wave 4 DP. We'll see if it can get there. Again, if the dollar corrects a bit, that'll allow gold to at least make a run at this level. If the dollar is going to just continue its move higher, it's going to make it difficult for gold and silver for that matter. We can look at here's the weekly of gold. Again, the TS2 sell signal was the wave 4, the ABC correction in wave 4 here, hit the wave 5 target with that support level there as well. And so we in another area again where we anticipate gold should move off of to the upside. It's made difficult because of the strength in the dollar. These are competing currencies. Silver, there's your wave 4 on the weekly chart, similar to where the TS2 sell in gold was, and into this one broke down from the minimum wave 5 target, reached the typical wave 5 target, this level here, and has come off that level. But again, I think if we get a correction in the dollar, that may help gold and silver, continue to make some progress to the upside. But if gold is going to, or if the dollar is going to continue the strength, then it's going to make it difficult for these to rally too much. Maybe just a technical bounce as opposed to some kind of fundamental change. Let's look at where's the bonds here on the weekly chart. So again, bonds have been strong. It's bumping its head. First here was that big move back here, where this was actually one day, because I know I was short the 20-year bond in here. Unfortunately, that big spike, but it came back in before expiration. But you can see it's now moved back into that level, testing the monthly resistance there. just check any pattern there. You can see it's also now on the weekly chart has formed a 5-wave pattern into the monthly resistance. We've come right into the typical wave 5 target here. Again, so an area where we could see some corrective action in bonds in terms of the weekly chart. Just see anything on the daily chart here, and you can just see on the daily chart there's the weekly resistance there. And let me just look at the monthly chart of the bond. And so yeah, we did reach, you can see I already have the pattern on here. When we came into the wave 4, we projected the wave 5 up on the monthly chart, and we're also now in the monthly minimum wave 5 target. So another area where you can see I already have the next target level for bonds in terms of the monthly chart. So if we've gone 5 waves up, the tendency is we can get a correction back to this level. Alright, so we'll watch that. Economic data this week. We start off the week slow, but things will pick up Wednesday. Basically retail sales, jobless claims on Thursday, PPI, and then CPI on Friday. Alright, so we'll wrap it up here. We'll take a look and see how things progress and come back next week and check it again. Have a good trading week, everyone.